Hi, John from York Bay Financial Partners, looking at investment markets. A little bit of conflicting data coming out of the US at present. Read the jobs numbers. ADP last week came out at 497,000 jobs created for June. That was a massive increase. The expected number was supposed to be around sort of 210,000. But then later in the week, we had the actual data coming out from the Bureau of Labor Statistics. That came out at 209,000 versus expected of 290,000. So quite a bit weaker than the ADP number. But it was the 30th month where you saw a further increase in jobs. Also as well, saw encouraging news on the average earnings. That wasn't up too much either. So apparently no inflationary pressures coming through in the economy. That's sort of been backed up by the CPI data coming out. That showed a headline figure of just plus 0.2 for June, 3% year on year. Core is still a little bit higher at 4.8%. It's just going to be interesting now to see how quickly the core numbers can sort of catch up. But more importantly, inflation is falling. Now that jobs data had a really pretty major impact on the interest rates. The 10-year and 2-year after the ADP numbers spiked pretty aggressively. The 10-year went above 4% at 4.01. The 2-year went way above 5%. That touched 5.12. But quite interesting that they couldn't hold above those levels and finished below 4% and 5% respectively on the day. And now backed off again quite aggressively. 10 years back at 385 and the 2 years back at 472. So now it'll be interesting to see what happens with the Fed. Are they still on hold? Because certainly the inflation data appears to be sort of heading in the right direction. They're slightly lower. Jobs is sort of, it's okay-ish. It's not that aggressive. But it'll just be interesting to see what the Fed do. Also interesting as well as obviously heading to quarter two earnings season. What was quite encouraging was that the stress test for the major banks, all of them passed that, which again was sort of encouraging. It took a little bit of pressure out of the banking system. Interesting, in the US, ex-President Trump has asked for his court hearings to be delayed until after the election. Is that a further just delaying tactic? Obviously still got the Russia-Ukraine war sort of rumbling on. That's now just past its 500th day. So for a conflict that President Putin thought was going to last, sort of a couple of weeks max, says now 500 days and running. Now oil spiked quite aggressively. That's nearly 76 bucks a barrel now, and it's just going to be interesting as well to see obviously the inflationary implications of that going forward. Now, the UK is the only major sort of country out there where inflation is still increasing, although the Bank of England governor has come out and said he expects to see some pretty big falls in the next sort of couple of months. The base rate of 5.5% and potentially now looking at a sort of a 6 handle for a terminal rate. That's really pretty aggressive. Now you contrast that with the EU, where you've got falling inflation in sort of France and Germany, and Spain's really doing incredibly well. Their inflation rate is only running at about 3%. So despite the last hike from the ECB taking their cash rate up to 3.5%, potentially there's not much more on the upside there. And again, you'd be hoping that during the summer months, those European economies get a pretty big boost from the tourist spend. Now, with inflation falling in Australia as well, the latest data is down just a little bit. That allowed the Reserve Bank to leave rates on hold and keep the cash rate at 4.1%. Now, that's only the second time they've paused in the last 14 meetings. But again, does show encouraging signs that certainly the Reserve Bank there has taken a much more sort of cautionary approach, really waiting to see the full impact of any rate hikes going through into the economy. Now here in New Zealand, as expected, the Reserve Bank did leave rates on hold at 5.5% for the official cash rate. Now that was pretty well signposted at the last meeting that the Reserve Bank was where it wanted to be and was now just going to wait and see the impact of those rate hikes. But again, that's the first time the Reserve Bank has paused since September 2021. When the OCR was 0.25, it's now 5.5. Migration numbers here are still pretty strong. Latest data for the 12-month running average was just over at 77,000 net migration numbers. So although the pace of the increase is sort of falling slightly, it is still a pretty strong number. Just under 78,000 people arrived in New Zealand over the last 12 months. But a little bit worrying for the government. The latest opinion polls saw a reasonable sort of fall for the government, but also as well the tax take is down. Since the budget, they're down around $2 billion. But while the tax take is down, the spending hasn't fallen in sort of correspondence to that, and it's still running along at budget levels. So obviously, potentially that means more borrowing for the government. Now, certainly the government will be hoping that the FIFA Women's World Cup will be a little bit of a boost to the economy, and certainly a major draw card has been the US team that's been hosted here in New Zealand. Potentially that could put in around sort of 60 to 100 million into the Auckland economy. Also signs as well the housing market has sort of bottomed and is now indeed starting to sort of show signs of recovery. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.